And with that, ladies and gentlemen, we are about to get started with the next panel discussion. So I'm going to request everyone to please be seated. I know the group discussions always follow after a stellar panel such as this, but please be seated so that we can get our next session started in a minute. With that, we're about to get started with our next panel discussion, and this is around the office real estate dynamics. We're trying to understand the demand and supply drivers. So first up, to spearhead this session, we have with us Ramesh Nair, CEO, India and Managing Director, Market Development Asia, Colliers, who comes with more than 23 years of experience focused on driving transformational change and delivering real estate solutions to domestic and multinational owners and investors. So we will be having Ramesh Nair, who will be spearheading this panel discussion. I'd like to also quickly introduce our speakers. After the group discussion here also finishes, then we can invite our next set of speakers on the stage. Well, that's the beauty of a phenomenal discussion. There are always more thoughts that follow up, but if I could request everyone to be seated so that I can invite our next set of speakers. Now, along with Mr. Ramesh Nair, we also have with us Ambar Maheshwari, CEO, Indiabulls Assets Management Limited, and he's someone who looks after the private equity business with a focus on real estate. And with an overall experience of 20 years in India and Australia, he's also been focusing on the real estate sector for more than a decade. So first up, if I could please invite Mr. Ramesh Nair on the stage, if I could also please invite Ambar Maheshwari to please come on the stage. And with that, let me also introduce our next speaker. We have with us Himanshu Shah, Head Commercial Leasing, Tata Realty and Infrastructure Limited, who comes with more than 20 years of rich experience, and he's a seasoned industry player who's had leadership roles with prominent realty firms like the Vadva Group, or for that matter, the Lodha Group and Kalpataru. So if I may also please invite Mr. Himanshu Shah to please come on the stage. Our next speaker is Karandeep Singh Nanda, Head Operations West Region, Embassy Services Private Limited, and he's a professional who comes with more than 21 years of experience in facilities and property management, and currently heading the property management arm of the real estate mammoth, the Embassy Group. So if I could also invite Mr. Karandeep. Our next speaker, ladies and gentlemen, Rajeev Sengupta, Consultant Corporate Real Estate, HDFC Bank Limited, and he's an experienced real estate professional with a demonstrated history of working in the banking industry with a strong business development professional experience. If I may please invite Mr. Rajeev Sengupta to please come on stage, sir. And that brings me to our final speaker. We have with us Vijay Rajagopalan, Head Leasing, Nucleus Office Parks, who comes with more than 15 years of experience across varied roles on both the tenant and the landlord side of the business, and also managed a diverse portfolio of real estate assets in the past. If I may please invite Mr. Vijay Rajagopalan to please come on stage. And ladies and gentlemen, I know we're talking about demand and supply drivers, but right now, this panel demands a huge round of applause before they get started. So let's bring that energy back in the air, and let me hand over the session to our session chairperson, Mr. Ramesh Nair. Over to you, sir.
Thank you, Sapna and Realty Plus team for organizing this. It's great to be back attending physical events, and we have a fantastic panel here. We have investors, we have occupiers, we have developers, we have service providers. So, Ambar, let me start with you. There's so much of worry around media. Every second article is about talks about a recession next year. Just 2 days back, I was reading that close to 60% of the CEOs in India, around 70% of the CEOs globally feel next year there's going to be a recession. Given that our topic today is about commercial real estate, what do you feel will be the impact? You were telling me outside that we may not have a recession, but we have seen this. There will definitely be slowdowns. The global economy slows down, even we will slow down. We've seen it multiple times. So what do you see the impact on commercial real estate next year?
Yeah, thanks, Ramesh. No, I think, so I read the newspaper article as well, and I thought it was very poorly written. I think the question was, recession in the US and Europe, not recession in India, which is why, majority of the people in India and outside of India, everybody felt that there will be a recession next year. I think US and Europe, both of them are pretty much on the path of a recession already, if not the next year. In India, there won't be a recession or any such thing. The technical definition of recession is 2 quarters of negative growth, and every single agency, whether Indian or foreign, IMF or whoever else, is projecting anywhere between 5.5% to 6.5% growth next year for India.
Next financial year.
Next financial year. Next calendar year. I think they do calendar years.
Yep.
So recession in India is not the topic of conversation at all. I think, yes, the growth will slow down. Interest rates, inflation, oil prices, gas prices will define the degree of that slowdown. But anything under 5%, under any scenario, is any possible scenario that one can look at today. If the Russia-Ukraine does turn into a world war, then it's a very, very different story. But other than that, I don't think any possible scenario today, whichever way you game it, it doesn't look like it is going to be a recession in India at all. There will be growth, it's the degree of slowdown. As far as commercial real estate goes, I think the impact on commercial real estate, to the, contrary to popular opinion, I believe next year commercial real estate will be better than this year as well.
Wow, this year was, we are estimating around 48-50 million square feet
Absolutely.
of absorption this year.
Yes,
Do you feel
yes.
it'll be another record year next year?
It will be a record year which will beat even 19 next year. The 2-3 trends that I'm seeing right now, because of which I'm saying this is, point number one, I think it has been a challenge for IT companies to get people back to work. And that is because every single employee is sitting on 3 offers. And therefore, they are in a position to call the shots. You call them to work, and they would quit and go find somewhere else to work at, right? What's happening in the US and Europe? Most of these firms have either already announced a hiring freeze or are in a process of doing so in a hurry.
Or letting go
right?
of people.
Or letting go of people. They've started letting go of people, but I think the next 2 quarters, we're going to see a whole lot more people becoming redundant out there and so forth. That impact comes to India with a little bit of a lag. And I think 3 quarters from now is where I see people coming back to work. And all the expansion that has happened during the COVID times, please remember the margin expansion and the growth that all of these IT companies in India have been through. That is the time when they are all going to look for office space and will have to plan for all the recruitments and expansion that they've done during that COVID time frame. And in my opinion, therefore, the next calendar year would be better for corporate leasing compared to what has been this year as well.
Rajeev, let me come to you. Ambar talked about if there's any recession worries for next year, it'll help companies to kind of push employees back. Our research even today shows that overall re-entry rates of employees coming back, even today in most cities, it's between 30 to 40%, which means 60 to 70% of all offices are lying vacant, in spite of all the REITs today talking about 98, 99% rent collection and all that. So how do we get more people to come back to work? I know, given that you work for a financial institution, people obviously have to come to work, most of them, but across the sector where IT parks today, yesterday I was with an IT company in Chennai, less than 5% of their employees are coming to work today. So how do you see that changing and how do you push employees to come back?
Good evening, ladies and gentlemen. Good evening, ladies and gentlemen. The question that Ramesh has put to me, I would like to look at it in 2 different ways. And I will also take some lead from what Ambar had just said, that people, there will be correction in the IT sector on the manpower perspective, in the sense that there's now a high demand. Now with things slowing down in USA, I think that there will be a squeeze in the number of people joining in our Indian support offices for the various IT companies. And to compounding that is that there's so much demand as of now that the IT companies have to give way to what the staff want. Even moonlighting, if it's been debated these days, basically nobody is upfront saying it is wrong. Somebody is taking time to say, even your Infosys not came after 15 days of Wipro saying that is not right. What is going to happen with the US recession coming in? There will be a squeeze on jobs from that part of town, that part of the world, along from the Europe. Europe is going through a bad phase. So things will, then the requirement for IT resources will just about come down. That is when the change will happen. But I don't want to sound too gloomy out here, because I know that if a Western economy has to come out of recession, the first thing they do was to arbitrage. I think this also happened in 2008 to 10, when there was a crisis, subprime crisis. How did they come back? And so outsourcing became much more in India. So as he rightly said, Ambar and I are more or less in the same track, that in a year's time from now, things will look up. But one thing is for sure, it's not going to be just having a desk and working on it. A sort of a evolved working system will evolve, in the sense that it could be a hybrid, agile, and a combination. A lot of the IT companies could think on those lines, like in Bangalore. But traffic is such a challenge, and that is why people don't want to come back, because they have to go through this harassment for years. That they realized during the COVID lockdown that it is possible not to work from your office. So it's, but they don't want to come back. Then what will happen? A lot of these IT companies, to cut out the difficulty of movement, they might have satellite offices in the parts of the city. I think that is a sort of evolvement that happened. I come from a sector where people were just waiting for things to open up, and everybody wants to come back to office. Although, even the senior management might feel that if it has worked so well during lockdown, why can't we make the best of it? Why can't we have a... But it's a cultural challenge. It will take time. So if you see as an organization, BFSI is consistent with the space requirements than many other sectors in India.
Rajeev, what are some of the big design changes you have seen in your office post-COVID? Like tech companies, the other day I was talking to a large tech client of ours. It used to be 80% desks and 20% collab zones. This company has been so radical in their change that it's become 80% collab zones and 20% desks. So what are you seeing? Not just your institution, but generally what are you seeing?
I think, actually, what is happening over the years, all the design front strategies that have been happening, evolving in the various corporate interiors, has been driven by the IT companies, mostly the multinational IT companies. But whereas Indian BFSI is a bit different. And what they had done about 5 years from now, we are somewhat moving towards that point. It's sort of in between what they had done and what. So 80-20, they have reversed. We are going to 80-20. Let's put it that way.
Okay. Vijay, let me come to you with the next question. Ambar sounded very bullish about...
Very happy to hear that.
Very bullish about next year. 2023 said if this year is going to be a record, next year is going to be even more. Is it just pent-up demand we are seeing? Where do you see vacancy levels have dropped a little bit from 19% to 17% in the last few months? Where do you see the market going forward?
So I'll just give a perspective so that we can then arrive at the answer that you asked, both on absorption, where are the demand drivers, and then the vacancy. Right, so as Ambar rightly said, 2019 was a record year for corporate real estate, 47 million square feet net absorption. Then obviously COVID happened, right, and then we nosedived. So absorption in 2020 was 50% of that, around 24 million square feet across India. 2021 first half was a whitewash. I'm not sure if anyone's phone was also ringing for any space takeout, right? But then, right, there was a glimmer of hope which started in the second half of 2021, right? There were green shoots, right? And then there was a resurgence where 2021, despite all odds, took up. Absorption was similar to what had happened in 2020, so 24 million square feet, give and take. Then, what happened now in 2022? I mean, Ambar just said, and you're also aware, we are as much in terms of square footage as 2020 and 2021, which is close to 22, 23 million square feet. Yes, so clearly the resurgence has happened. Clearly we are back on the right curve, right? We are on track, right? Now, is that pent-up demand? Whilst, right, 2020 and 2021 in the first half, people only spoke about, do we need the space? Cost optimization, work from office, this is doom. We will never need an office space. We are very comfortable working at home. TCS announced it, right? But all of them have started coming back to office, right? And what we have seen is Indian conglomerates, Indian companies like banks, law firms, consulting firms, engineering, manufacturing, all these industries took space and expanded within our portfolio, right? We did 1 million square feet of net leasing last year, 2021, right?
Well, how much did you say?
1 million square feet.
Million square feet, okay.
Net leasing last year, right? So it was not all doom and gloom, right? And then one segment which surfaced and which is good for all of us is the flex space and the managed office space operator, right? Whilst they were a single-digit segment absorbing space across India, last year I think managed office space alone accounted for 15% of the net absorption across India. So that is one segment which is right after IT, ITS, and BFSI, which is emerged and which probably saved our day last 2 years, right? So that is where it is. So now coming back to you addressing the vacancy part of it, right? Vacancy is twofold, right? One, it depends on absorption, which just determine that it is quite steady and growing. And what is the supply which is coming in the next 2-3 years, right? Mumbai and Pune, per se I'll address, is going to witness an influx of about 11 to 12 million square feet each up till 2024, right? Most of that supply is back-ended in 23-24. So no new supply, absorption looking good, economy is looking good, so definitely the vacancy has to come down, Ramesh. So that is my take on it.
Got it, Vijay. So what you're saying is vacancy has to come down because not much of supply is coming up compared to the demand which is keeping pace with the
Yeah,
supply.
so demand is quite robust and Ambar just announced it's going to just go up. So yeah, vacancy is bound to drop, and I speak only for the West because my point of view is South is still dependent on offshore IT business, which probably because most of the IT corporations are taking a wait and watch game, right, might slow down a bit, right? But I'm not saying there'll be recession, but there'll be a wait and watch policy, at least in the South. Yeah.
Himanshu, if you look at West India versus South India, South you have 3 big markets, Bangalore, which is like 35 to 40% some years of the total absorption. You have Chennai and Hyderabad. West is catching up. Mumbai has been doing very steady. Pune has kind of come up very well as a competitor to both Hyderabad and Chennai. Where do you see the West India office market going forward?
Thank you, Ramesh. Hello.
Yeah. Audible.
So, I mean, both have a very dynamic offering to make, actually, Mumbai and Pune both. And I'll put a summary to it, and I'll put a table to it, just to a little more explanation.
Mic a little closer.
Yeah. Sorry. So while Mumbai does about 5.5 to 6 million square feet, Pune does similar to 5 million square feet every year. Both cities have a similar 13 to 15% range of vacancy, give or take. 130 million square foot of space stock in Mumbai. It's about 60 to 62 million square foot of stock in Pune. In next 2 years, as Ramesh, in fact, Vijay also mentioned that Mumbai will see about 12 million square foot of supply coming in. And similarly, Pune will also see about 11, 12 million square foot of supply coming in. But these are statistics. What changes between these two cities is the parameter in the sense that the contribution, the demographic, the change which these two cities brings in, actually. So Bombay is driven by BFSI and flexi space operator, contributes about 50% of the space absorption in Mumbai. Where in Pune, ITES and flexi space operators contributes about 50%, says, followed by R&D, followed by startups, engineering, R&D, and so on and so forth. the distinction between these two cities is the infrastructure, the influx and the transport infrastructure which is getting developed in these two cities is so massive that we are not realizing the change it will actually bring into the city, the way we live, the way we work in the next 2 years. Another very important aspect is the cost of living. Actually, one of the data which suggests that Pune is about 35% cheaper compared to Bombay in terms of living, okay? Rental spaces are cheaper. So, if the IT is doing well, if the BFSI sector is doing well, I think Bombay and Pune by and large will do exceptionally well. My personal feeling is that Pune slightly will do better than Mumbai, is my sense actually. So, in nutshell, what I would say that West will be tough. I mean, Pune particularly will be a tough competition to Hyderabad and Mumbai. Both bring different flavors, Mumbai and Pune, as we rightly mentioned. One of the very important aspects is the talent availability. Both offers very different talents. Mumbai offers financial and tech talents. Pune offers tech innovations, actually. So, I think Pune will do better because of the availability of a talent and ease of talent, actually. So, because of the infrastructure, a lot of mobility of a talent will also happen. And just to give you a synopsis, is one of the IT companies survey is that if given a preference to relocate in one of those big cities of Bombay, Pune and Hyderabad came as the preferred migration choices for. So I guess both will do well, both will sustain and probably grow, but Pune slightly will be better than Mumbai is my sense.
Thanks, Himanshu. I was in Bangalore a few weeks back and I managed to see Karan, the Manyata Tech Park campus. And I was so impressed what Embassy REIT there is doing in terms of upgrades. In Bombay, I find it tough to convince developers to spend 100 rupees on upgrading a building per square feet. And there I was seeing in Manyata, where your team was spending like 1700 rupees per square feet on upgrading a building. I've never heard of those kind of numbers before, and I could clearly see the difference, which was helping you go from a 55 rupee market to a 95 rupee market. It was amazing stuff, and the government didn't build a flyover, and you decided to do a flyover on your own. You spend like 150 crores to build a flyover to ease traffic in that junction. Site upgrades, how you spend like 120, 130 crores. Well, amazing to see the kind of upgrades happening, because the project was started around 10, 15 years back and it's evolved. My question to you, Karan, is there's so much of talk around ESG, and there are many occupiers, many developers in the audience. What are some of the things they should keep in mind if one, they are an occupier, and the two, if they are a developer on the ESG front?
So, it's very good to see that ESG is treated as a genuine phenomenon today in our business pursuit, and as developers we should always approach it with zeal. So like if I talk about Embassy, we have a 4-step strategy towards ESG, which is measure, and then benchmark, and then we invest, and then finally we sustain. And if I talk about the prime 3 areas where we are investing our time and money as far as Embassy is concerned, so first definitely is on technology adoption, which is mainly in terms of metering devices. So today with the IoT and the clouds, you can measure your power consumptions, and that helps us in data-centric decisions. Secondly, I would like to state that there is a lot of investment in infrastructure upgrades, whether it is MEP upgrades or you are having energy efficient facade glasses. But besides that, there is also a lot of focus in making our buildings friendly for the people with disability. So there we talk about the RPWD compliances and all. And thirdly is solar power, solar energy, green energy, which we talk about. And like we have a solar power plant in Bellary, which is in Karnataka, and we have a 100 megawatt solar power plant. So we basically produce the solar energy, and we do complete energy wheeling It goes to the BESCOM grid, and from there we give it to our clients in the business parks. And this is one of the major reasons why the clients also wants to be in our buildings because of this solar power. So I think these are the prime focus areas, and besides this today, if I talk about developers everywhere, they are focusing on biodiversity, like creating butterfly gardens. We are having apiculture units today because we consider that honeybees are also an important part of our ecosystem. And besides, also, if all the new buildings today will have OWCs, which is organic waste controller. Now, very important is, again, how you control your waste management. So, you recycle your dry waste and you compost your wet waste, and then you strongly, from a developer side, also govern that your landfill reject should be less than 8 to 10%. And in some of the buildings, we have even achieved till 2%, 3% of the landfill rejects. So this is from the developer side. Now, if I refer to the occupier side, I think occupiers today are moving towards use of green chemicals. So a lot of green chemicals today are available in the market, like Alpha HP, Stride NP, and Good Sense and all, which are not only good for the environment, but at the same time, if you see the dilution, what you do of these chemicals in your regular water, it is less. So that is another cost saving. And besides this, also two more points I would like to highlight from an occupier side is that one, very small initiatives like water flow reducers and aerators and all. In one of our occupier side, they were able to save around 9.17 lakh liters of water by only installing around 17 to 18 water flow reducers. And that used to only cost somewhere around 240 to 50 rupees. So you can understand the amount of water which is saved. It is equivalent to providing water to 4 to 5 homes annually. If I consider like one person, he consumes 150 liters per person per day. Besides this, another important focus as far as the ESG from occupier side is also on waterless urinals today. Lot of saving there in waterless urinals, and roughly if you talk about the figures, anywhere between 80,000 to 1,20,000 liters of water you can save. So these are some of the focus areas as far as the ESG is concerned.
Thanks, Karan. Ambar, coming back to you, we've seen close to 70 to 80 billion dollars of FDI come into Indian real estate over the years. Most of that has gone into office, and office is also preferably the most preferred asset class across the world for investors. And today you see the Blackstones, Brookfields, GICs who invested massive amounts of money in Indian real estate. Where do you see the opportunity for outside office asset classes? So industrial is now catching up. Last couple of years there's been talk of data centers. Where do you see that global FDI interest in Indian real estate?
I think office will continue to be the largest in the foreseeable future, the next 10 years if you like. So, you know, it's not just because they prefer office, it is also a risk-reward, risk-return.
Tradable also.
Ramesh,
Tradable.
absolutely right. But look, if you look at it from a foreign investor's standpoint, if you're investing into a completely built, leased out, income-producing asset, you're doing away with development risk, you're doing away with marketing risk, you're doing away with regulatory risk, no approvals, permissions, and so forth. So, foreign investors are very wary of risks in India as far, you know, versus the return. So, typically you would look at a risk and a return hand in hand. But the moment you look at India, the risks outweigh the returns. And therefore, all the monies, the foreign monies have, and not just real estate, even infrastructure. Every foreign investor today is very, very happy buying a completed road, ports and so forth. They do not want to take development risks. We call it private equity 1.0 way back in 2005, 2006 that came about. All the foreign money came into development projects and none of the projects did well. I don't think any fund returned its capital also back of that vintage, right? And because of that, risks have become a huge, huge issue. So going forward as well, completed office will be the mainstay. It is something which not only the fact that these guys understand it better, but also from a risk return standpoint for a country like India, they're more comfortable taking a bet on a fully completed, fully leased out office. Yes, there are other sectors. Industrial will do well, but again, bulk of the money will come in when the stock of warehouses is ready, rather than going into the development.
If you had to pick one sector outside of office, what will that be?
Industrial. From a
Industrial.
volume standpoint, industrial. Every sector will attract investment sporadically, or a smaller percentage of the total pie. But industrial has the potential, given where e-commerce is, given where, India is still a developing country, the consumption is going up, disposable incomes are going up. Just yesterday, there were headlines, or day before, that, India pulled out so many people out of the poverty, below the poverty lines, and all of these guys are going to become consumers. So the consumption will continue to go up for the next 25 years, and industrial is something which I believe, and if we have to become that Mr. Modi's dream of Make in India champion, then industrial is the next alternative in my opinion.
What do you think of newer asset classes like data centers? There's so much of talk around that.
Oh yeah, they are. I mean, in a country like India where more than 50% of your population is below a certain age, I don't know if it is 27 or 30 years now, and all of these guys are consuming so much of data, so data centers will continue to be there. But I believe, like most sectors, like everything else in this country, I mean, I keep going back to telecom all the time. We had a large number of telecom players and there was a glut. Office, we had a large number of office players and we had a glut in the beginning. Even in data centers, we are going to see a glut sort of a situation, and I believe it's a 3 to 5 year sort of a time frame. There will be overcapacity in data centers, and then things will stabilize. I think we are more entrepreneurial than anybody else in the world, and therefore, you see a particular trend and you jump onto the bandwagon. So everybody has jumped onto the band. I think everybody and their grandmothers are into data centers right now. Right? I don't know anybody who's not. So that will lead to an oversupply in a 3 to 5 year time frame, and then there will be consolidation. Just like Blackstone started to consolidate the India office space, some investor, large institutional investor globally will come in and start to consolidate data center. It could be a strategic guy, it could be an Amazon which could consolidate, it could be a Microsoft which could start the consolidation play in data centers in a 3 to 5 year time frame. And then more sanity, more rationale will come about and so forth. But in the short term, I see a glut situation in data centers.
I was seeing the global investment data, RCA data, and what I noticed was in the first 6 months of this year, office is down, industrial is down. One asset class which has done extremely well over the last 2-3 years is rental housing, residential rental housing.
In India?
No, not in India, global. I'm talking
Globally,
global.
yes,
In India,
yes,
it's
yes.
non-existent.
Yes,
And that's
yes.
my question, Ambar.
Right.
Do you see a market evolving for an asset class like rental residential housing
In India?
in India?
That's a long-winded answer to that. I'm going to try to be short about this. I think there is a fundamental, I don't want to call it a flaw, but there is a structural fundamental shift or a change that we need in this country for it to become a market for institutionally owned rental housing. Everywhere globally, you're absolutely right, and we discussed this some time back in another forum where US rental yields had gone up to 8-9% and so forth.
So today, if you invest in US residential, you can get 8%.
Absolutely.
While you invest in Bandra, you get 2%.
2%.
Or not even 2 maybe, maybe 1%.
Yes.
Yeah.
No, 2% it has come to because of, particularly in Bandra, because of the lack of supply there. Everything has gone into redevelopment and then, rentals have gone up. But until the time there will be a negative spread between rental yield and mortgage rates, you will not have an institutional market for residential rentals for this country, which is what I mean by a structural or a fundamental shift that has to happen. I strongly believe that at some point in time in the next 5 to 7 years, interest rates will come down in this country, given what's happening at a global level. And if we get our strategy, our path to that right, then I think both on the currency front and the interest rate front, we are going to become far, far more competitive than we are today. Rentals the yields will continue to go up because I don't see capital values going up beyond where they are in a meaningful or a significant manner. We are already at global prices. I mean, in Mumbai, $1 million will buy you a small 3-bedroom apartment, right? These are New York prices. These are Chicago is cheaper, London is cheaper, on a comparable basis. So I don't think these prices in Mumbai are going beyond where they are going, where they are today. But the rentals will keep going up because rentals are driven by inflation, they are driven by disposable incomes and so forth. And therefore, at some point in time, over the next, say, 7 to 10 years maybe, rentals will catch up to a yield which will become higher than mortgages. And at the same time, the mortgages are going to come down, from a 7 to 8% at this point in time to, maybe under 6% or around 5-odd%. The day we get to a mortgage rate of 5% is when I believe the institutional market for residential rentals would come about.
Got it. Rajeev, I was just taking data points for construction cost increase over the last 18 months, since last March, so March 2021. Most items, the costs have gone up anywhere between 12 to 20%. Steel to cement to aluminum to copper to everything. How do you see that impacting from an occupier point of view? The other day you were telling me about your plans for opening up hundreds of offices and ATMs and back offices and all that. Where do you see that impacting an occupier? Today people are paying that, whatever the 12 to 20% increase in construction cost. Does it change your way you look at real estate?
The growth that we are planning for our organization, this is coming as a roadblock, but we are overcoming that.
How are you overcoming?
We are accepting that. Actually, we have done projects where we have seen the movement of escalation is from 15 to 22%. In a real construction project that our organization is doing.
Just interiors alone?
No,
the
building itself.
Building itself is 15-22%. And interiors?
Interiors is going up by, I think it's 8 to 10%.
8 to 10. In the last 12 months?
Last 12 months, I would say yes. And the other challenge that we had was, the chip prices actually came in the way of our deliveries because a lot of our infrastructure is dependent on gensets and air conditioning. And this chip was coming in the way. I'm not even taking to the point where our servers and routers were not available. That was another. We had to hire servers and router at an incredibly high price because the supplier had clearly said 8 to 9 months supply time.
Wow.
It was so bad.
Same as automobile manufacturing. Yeah.
And the prices have gone up for 3 reasons. Basically, Ukraine and Russia is one of they supply 10% of the steel in the world, 10% of the steel, and now both of them in a disturbed state. So obviously the demand has gone up in the world market for Indian steel as well. The local market there was 66% increase of steel prices at one point of time from the pre-COVID days. So it has now stabilized right now, but still it is at least 20% above than what it was pre-COVID days.
Got it. Vijay, I want to ask you a question about Bombay again. You showed me your OIC. It's called OIC now. It old.
Yeah.
And my request to the audience here is we were talking about upgrades of Blackstone and their one arm, which is the Embassy REIT. And this is the Nucleus arm of Blackstone. The way when Ambar sold it to them a couple of 2-3 years back from, it was already a grade A building. And the way Blackstone is kind of invested in that building to kind of take it to the next level, it looks like a 5-star hotel, that project. But that's one thing, which is your upgrade, which is under your control. What is out of your control is the infrastructure, low parallel traffic and all those mess associated with different. It's not just low parallel, but across the city.
Which also we managed to change a bit though.
You managed to change quite a bit, I know that, but what infra upgrades is required for a city like Mumbai to make it compete with global cities?
Okay, so I'll stick to transportation infra, obviously, because not qualified to talk about digital or renewable. right? As we all are aware, right, infrastructure is the backbone of economic growth, economic development, and India is on an upswing, clearly. But the dichotomy or the challenge that we have as we talk about urbanization, globalization, smart cities, we have smart homes, state-of-the-art offices, great residential apartments. At the same breath, at the same time, we experience congestion, potholes, right? So we are perennially stuck somewhere. And the state of affairs of our public transport, though, is good, but it's not as comfortable as developed nations, right? There's a recent survey which was conducted in 2022, early 2022, which is a livability study amongst 170 top cities in the world. Mumbai fared 141st. It was languishing at 141st. The only saving grace is we were marginally ahead of Bangalore, if at all that's a saving grace.
Better than Kabul or?
Yeah, better than Bangalore.
Oh, Bangalore, okay.
Yeah, so marginally ahead of Bangalore, right? So that is a reflection of the poor quality of infrastructure, right, that we have. Well, I don't want to be a person who's like saying all doom and gloom, right? There are a lot of infrastructure projects which are under construction as one would see across the city, across India. So Mumbai, obviously we are all waiting for the metro to happen. We are hoping and praying that decongest our roads. There's an airport which is planned, there's a coastal road, Trans-Harbour Link, Mumbai-Delhi corridor, and so on and so forth. But everything has to see the light of the day at some point in time, which I presume between 2023 and 2025, most will have seen the light of the day. But my problem is not with all these development, which I think will help Bombay. The problem is how do we integrate all these things? Right? That is where the problem is, right? Integration of large-scale urban development is what makes a city a global city, right? Will the investments happen? Yes, the economy is on a boom. There is momentum. China is going through what it is going through. So obviously, real estate investments will happen in India, right? As Anuj was mentioning, we contribute probably 10 to 11% of the GDP through real estate. It will move to probably 20%, which US and China is, right? But if we want to be $1 trillion real estate, right, then we have to push these boundaries, right? We truly have to build global cities, right? And for us to be a global city, to have an integrated planned development, we need to be able to travel a 50, 60 kilometer stretch seamlessly, comfortably, end to end, in probably a 50 to 60 minutes. And for that, integration of all the infrastructure I spoke about has to happen. And we also need to build satellite cities and towns which are connected well. Otherwise, the infrastructure is going to collapse and disintegrate one day.
Very well said, Vijay.
Yeah.
I work in BKC and I stay in Bandra. And in the evenings, it takes an hour to go from BKC to Bandra. So we're not very far behind Bangalore in terms of traffic situation. I'm sure next year we could give Bangalore a run for its money in terms of at least traffic. You see that fantastic project of Equinox in just off BKC, beginning of Kudla. The project has come up so well, the upgraded project. But around that, there's nothing which has been done. It's still the same way it used to look 10 years back or 15 years back. But when I compare that to what you have done in that upgrade around the Indiabulls side, the OIC, what you had done, any experiences you want to share with what you did with the government and how you partnered with the government in terms of upgrading that region itself?
So what we realized is, obviously, everybody talks about when lower peril comes to your mind, it is traffic congestion, eyesore, right? And constantly you keep hearing it and you kind of tend to hate it subconsciously, right? So we thought let's come up with a plan to upgrade the entire neighboring infrastructure, right? The environment around the building. And thankfully, COVID happened, so we got a brilliant opportunity to do it without much intervention. So obviously, we went to the government. We had to take some, if I'm not mistaken, some 25, 30 odd approvals, convince the BMC that this is needed, right? And obviously, because that was the constituency of one of the ruling government at the point in time, the approvals were easy, but they also had certain whims and fancies which we had to comply to. By the end of the day, it took about 1.5 years when all the occupiers were at home. And everyone, when they came back, they were pleasantly surprised at the entire road outside Lower Parel, right? Obviously, there were illegal parking. We had issues with vagrants under the flyover, a lot of misuse of public property. All that is controlled, beautified, right? We have traffic marshals. The entry and the exit, which equally matters for a world-class building, has to be at least of that, complementing the building that is. We have changed that. Now it truly looks like a world-class entry and exit, right? And all the occupiers, the testimony to the fact that except a couple of occupiers would have left the building, even COVID didn't happen, all the occupiers have renewed our leases. And they are very happy once they come back to our parks. Right? So such infrastructure development, not only inside the building, outside is of paramount importance. Still, the government takes initiatives and does all these things for us.
Himanshu, I want to ask you the same question in terms of what you're coming out of the fantastic park in Navi Mumbai. It's going to be definitely one of the best parks in that region.
Yes.
Already some good supply in areas like Airoli and Gansoli, those belts. But infra to get there from here, today if somebody from western suburbs, a lot of talent works in western suburbs. 50-60% of the city's talent comes from, not works, stay in western suburbs. For them to come all the way to east and then to Navi Mumbai, there will definitely be resistance. How do we fix that from an infra point of view?
I think the solution is very simple. There are 7 metro proposed in Mumbai. And on integration of that 7.
7 metro, different lines.
Different lines.
Yeah.
I think we are not realizing, Ramesh, that what will happen once these 7 metro actually get completed. The whole dynamics of real estate, the whole dynamics, the way we see, the way we perceive city, the way we work will change completely. Apart from, there are 2 more metro lines which are being developed in Navi Mumbai itself.
When will all this happen?
Mr. Fadnavis has promised that the delivery will start from 23 onwards.
23 to?
He mentioned 23 to 25.
Okay.
So I'm assuming it will continue to, he will honor to what he says.
So 4 out of the 7 will have a connection to Navi Mumbai.
2 are within the Navi Mumbai belt itself.
Okay.
And then 5 will have interconnectivity between the city and not exactly to the Navi Mumbai, but within the city connectivity.
Okay.
It will actually join in the western central connectivity. There's another bridge being planned. Airoli is already there, Vashi is already there. There's another bridge being planned is the Jogeshwari to Ghansoli. That will change the whole dynamics actually. And that will, from central line to Ghansoli, you can reach in 15 minutes on that. That's another very, very, though it is proposed, it's not started yet. Hopefully it will start soon. But I'm saying that's a game changer for Navi Mumbai actually to become more accessible to Western line, as you mentioned, right? So I think that's one of the reasons.
Thanks, Himanshu. Karan, let me come back to the REIT front. 4 years back, there were no REITs in the country. Today, there are 3 REITs. There's been media reports of Blackstone doing a REIT in retail. There's talks that Panchsheel, Salarpuria, Nucleus, all coming out with combined REITs or separate REITs. DLF, the media had spoken in between that DLF could be a REIT. What are the big changes you see when Indian developers become REITs? At least from an occupier point of view, from a developer point of view, what are the big changes one can expect when there are more REITs happening? Like what did you see in, let's say, when you moved from, let's say, an embassy company to a Blackstone REIT-owned company? What are some of those changes you saw?
So, Ramesh, I think one of the most important changes that today most of the investors, they are having a lot of confidence with REIT. And the reason for this is the simplicity of investing. So, definitely they can get the share in value proposition and rental incomes without having that hassle of buying properties or managing or selling properties. And if I talk about the figures, 6 to 8% you can get a return on dividends annually, and investors can expect around 8 to 12%. That is what we are giving in embassy, at least 8 to 12% on an annual basis in terms of capital appreciation. But again, it depends upon what price your stock is trading in the stock exchange. So most important is today it is a very, I'll say it is a less volatile also investment if you compare to like a mutual fund and all. and better than FDs in terms of, there is a lot of cash flow, backing of cash flow by institutional financing and all that. So I feel that it is a very promising investing today for local investors. So that's my input here.
About Karan, we have time for a few audience questions. Any questions? Please, sir.
You have a lot of technological solutions in whether it be it in procurement or construction, let's say spend management. So effective use of these technologies can control, I would say, if not reduce your cost of construction. My question here is very clear. The answer to which I am listening over the last 2 decades is mindset. Why are people still not using technology to the extent it needs to? So is there any other answer rather than the mindset factor? That's my first question. Second is, being thought leaders here, anybody could answer here. Are we really looking at upskilling people? Is competency is an issue in terms of technology adoption?
Great question. Rajeev, you want to take that? I still remember around 3 years back when I did a PropTech event. There were like 700 odd PropTechs in India who had shown interest. I totally agree with you, sir. In India, tech adoption is very limited compared to what, especially in our industry, the real estate and commercial industry. There's a lot of talk which happens, and maybe I'll come to Vijay or Karan to talk about some of the things you are trying to do as from a Blackstone point of view, global to India, some of this tech adoption. But there has been a resistance. Rajeev, and what are your thoughts around that?
I think I am not sure I can give you a very sure answer for that, because I have been also trying to find why we don't do this. The initial thing when for my organization, I had the privilege of doing 3 building projects. 2 are completed and 1 is in progress. And we actually looked at it. See, what you said made a lot of sense. In China, I think they do a planning for 1 year and a building in 3 to 6 months. So that actually saves a lot of capital costs.
I think in Japan also they do.
Japan also.
Yeah.
And even Singapore does it in a year or 1.5 years. But the initial investment for this technology, because it's an imported technology, it's not homegrown here. So that investment is significantly high. Until and unless I think the body of all developers get together and actually invest in that and get on with it. So in fact, for all the 3 buildings, we looked at it. We did not find vendors who could. It was not possible for us to take the technology from outside. We had to depend on vendors for doing construction. Our construction projects range from 100 crores to 300 crores. In this bracket, there are not very many players also. You have L&Ts of the world and Shapoorji of the world who are beyond 300 or 500 crores. But it comes to 100 crores to 300 or 400 crores, not very many players with that deep pockets and technology to support.
One interesting initiative I saw last week was CREDAI has set up a new PropTech fund, and they inaugurated it last Friday. And they're planning, I think, $100 million PropTech fund. It's a very good initiative from CREDAI's side, worth exploring for you. We'll take a couple of more audience questions. Any other questions? Any questions? Please.
Good afternoon, everybody. I'm Sanjay Agarwal. So my question to the elite panelist is that Mumbai faces a very strange problem of having a clear demarcation between a residential area and a commercial area. So that becomes a very eminent problem. We talked about the traffic situation where even for traveling for a very small distance, we have to take somewhere around more than 1 hour. So can we also see going forward the official areas now shifting to suburbs so that the traffic can be managed better? Thank you.
Ambar, you want to take that? Shift of office districts to suburbs.
I'll make an attempt. So I think in some ways it has already happened. 20 years ago, Nariman Point was the CBD. It has now, moved to BKC. Lower Parel came in as another CBD and so forth. I think, if Tata's and Godrej and everybody starts making Navi Mumbai the way it is being planned, it is going to move there as well. So over time, I think it is more about supply and then, so it's build it and they'll come, that sort of a thing. But it's happening, it will continue to happen. As we just talked about, Ramesh just mentioned 50-60% of the people actually live in that part of the town. It is only logical that the place of work should also be closer to where people are staying. It takes time for a bustling, vibrant city like Mumbai, which has an influx of migrants, on a quarterly, on an annual, and a 5-yearly basis. It does take a little bit of time for the center of activity to move from one place to another, but it is happening.
It's already happening. If you look at the overall annual office absorption in the city, the 5 to 6 million square feet, only 500,000 is happening in CBD or surrounding areas. The balance, 5.5 odd million is happening anyway in the suburban district. So that's already happening. A terrific panel. I'll just summarize some of my key learnings from this session. Ambar said definitely no recession next year in India. 5 to 6% growth expected next year also. He also made a prediction, and I'll catch him for this next December. He said 2023 will break office space absorption record in the country. Job pressure in US and Europe, he said, will push employees to come back to work. Companies won't be all that worried about employees leaving. Rajeev fully agreed with that point of Ambar's. Rajeev also said that satellite offices is something which will happen within the same city. Companies will look at more satellite offices. Vijay said whatever demand we are seeing is not just pent-up demand, the record absorption which is going to be witnessed this year. He said it's also because there are many industries who have done well in the last 12 months. The managed office demand which has come up, that's a new sector which has come up, and he feels vacancy levels will definitely have to come down further from the current 17%. Himanshu is very bullish about West India. He also handles West India. He said there's a lot of close to 11 million square feet of office absorption in West alone and 170 million square feet stock. He said infra in West is much better than South. We've seen some of those images of Bangalore floods recently, which is quite scary. It looked like Mumbai in 2005-06. And cost of living, you said Pune has a clear advantage. And Mumbai has the advantage of variety of talent. It's not just IT talent from all industries. So Himanshu, that is a very good point. Karan, on the ESG front, very good to hear about that 4-step process you spoke about: measure, benchmark, invest and sustain. You also spoke about how tech adoption is important on ESG. We just today talk of ESG, but we don't look at tech. It's a very good point. MEP upgrades, most developers are not thinking about it. That is a great point. Green chemicals and small things like even water flow reducers can do so much for ESG. Ambar, again, you spoke about how office demand as an investment asset class in the country will continue, also because globally it's the #1 asset class. You spoke about how investing in a core office building takes care of multiple risks associated with market risk, compliance risk, development risk, all that. You also spoke about how PE 1.0, when a lot of people invested in development projects and lost money, and that's the reason why they're coming towards more core assets. You were bullish about industrial. You felt that was the second big asset class which will catch up. You gave a very good point around rental housing, which is a big trend across the world but non-existent in India. You said till the negative spreads between rental yield and mortgage rates happen, you're not going to promote rental housing. Rajeev, very good point around inflation. How you spoke about 15 to 22% increase in base build construction cost last 1 year. That's been a roadblock for many organizations. Again, on the interiors alone, you said 8 to 10% increase thanks to inflation and although China supply chain concerns. You also spoke about how small things like those chips and routers and all that are causing various disruptions from an occupier point of view. Vijay, you spoke about how infra needs to improve. Mumbai's ranking today is very bad, but you said it's still a little better than Bangalore. That integration of that multimodal transport initiatives from the government side, that's very important. Himanshu, great to hear that there'll be the 7 metro lines. I know we've been talking about it for a while and we've not seen it, but you feel that's going to definitely change, especially in areas like Navi Mumbai, the connectivity is going to improve. Interesting to hear about the Jogeshwari Gansoli bridge, which is expected to come up. And Karan, was very interesting to hear your views around how REITs are going to change the overall landscape. So thank you, Sapna and team, for organizing in-person event, and look forward to more in-person events going forward. Thank you very much.
Thank you very much. And a very, very pertinent discussion and very beautifully moderated and also summed up by Mr. Ramesh Nair. Thank you so much, sir, for that. And I'd like to also thank all of our speakers. That being said, may I please invite on stage Mr. Haresh Motirale, Founder Director, Brand Nitty, to please come on stage and also present a token of gratitude to all of our phenomenal speakers here. Let's have all of you come together for a group photograph as well. Thank you once again, gentlemen. Thank you very much for joining us and for sharing your thoughts.